Good morning and welcome to trading in the month of February 2026. We are about 30 minutes before the market opens, and it looks like the open is going to be lower. We had a pretty volatile week last week, and some days look pretty interesting. Some stocks sold off quite harshly. Just ask Microsoft stockholders, and some stocks went up. Just ask a SanDisk stockholder. Boy, they've been flying up, and so has gold and silver. It's almost like in some of this euphoria in particular markets makes me feel like, man, we can really have a doozy of a sell-off if those markets start to crash. But that's what I was observing. What was your take last week? What did you observe? Anything interesting that you want to point out?
I know the markets struggled a little bit. SPY ended up being closing up to the upside. My portfolio did pretty well, but I know the volatility is still there, and it looks like we're going to get a little bit of that this week as well.
Yeah, I think what keeps coming back is I think the AI trade is beginning to get a little uncomfortable, if not a lot uncomfortable. And I think that may show up like last week, right? Microsoft's a big AI company, and what was actually hurting them is their huge commitment to OpenAI. It's like,
Yep.
okay, we don't know if OpenAI is going to be, a great business or a terrible business. And the long and the short of it is that we don't know. It could be that these businesses end up becoming just so darn valuable or not. And that's investing. Now, it's more comfortable to invest in a business where you have a track record, right? You have, like Disney announced this morning, obviously they have a long track record. They've been around for a long time. We know what they do. We expect a certain revenue stream from them going forward, cash flows, profits, and all that good stuff. Well, when you have these new industries, AI, you have OpenAI, they're supposed to IPO this year, if I heard it correctly. I'm not quite sure if it's going to be really that valuable. I think it's going to be overplayed, and we'll see. The market's certainly taking some chips off the table with regards to AI, but it's not affecting semiconductor a whole lot. The semiconductor space has been doing well. Let's take a look at the year to date on the heat map, and you see that some semiconductor stocks like Micron are just flourishing. Intel, Texas Instruments, look at that, beautiful. And the space that supports semiconductor has been flying up this year, just doing really, really well. So some spaces are really hurting this year. Software is just getting hammered, just getting taken out with last week's garbage. And energy's had a good year to date so far. Some healthcare companies are doing well. Material stocks have been doing great, especially the precious metals companies. Geez, incredible. Industrials have been doing well. That's pretty good participation there. Consumer discretionary, Home Depot, Lowe's, doing well. So interesting year in the making. Let's see what happens next. What's the next shoe that's going to drop? And be interesting. Any observations or year to date on what you're seeing?
No, nothing really. I know energy has done really well, maybe getting a little overbought. Healthcare has really taken a pounding most of last year and looks to be continuing this year. So that might provide some opportunities. I just don't know just yet.
Yeah. Yeah. And, you know, I'd like to own one more material stock. I'm good with energy. I've got Chevron and Occidental. Um, but I'm being careful. I'm being patient because um, I think we could have a good sell off. We could have a good correction. I don't know if it's going to happen in the next couple months, but certainly feels like if you have the right negative story, we can certainly go in that direction.
What area within materials are you looking?
Man, I would love to buy a copper producer at the right price.
Okay.
Um, I'm not a big precious metals guy. Um, so that's what I'm thinking.
Okay.
Yeah. And let me take a moment to welcome the newest member of my channel and really appreciate you getting signed up. It looks like you're from Norway. That is awesome. Great to have you. And the way the live stream work is you're a member. So if there's a stock you'd like me to look at and for Daryl to comment on, please put it in the chat and then we go over it. And that's part of your membership. Really appreciate it. And then there'll be member only videos coming out. If you have any questions, you can email me. You can contact me on the YouTube, chat. But really appreciate you becoming a member. Looks like Shadow Guy is on. Sam is on. Yeah, gold and silver crashed on Friday, but they're back. They're like, hey, let's take a look. Let's take a 5 day and see if I guess it is still a little lower. It's trying to mount a comeback rally. And it's been incredible to see gold. And I think silver has been on an even more incredible path. Well, I think I got the wrong one here. So let's get rid of that guy. I'm not a big silver investor. What should I be comparing to? I just thought I'd type in silver.
SLV.
SLV.
Yeah.
All right. Let's take a look there. So silver was flying high. It's only up 17% year to date. Well, okay. Let's go 1 year. There we go. So over 1 year, silver's up 163%, although it did have a rough last couple of days. I think it was above $100, right?
Yep.
Man, I should have shorted it. Monday morning quarterbacking. Monday morning stock investing, stock trading. So let's see how that plays out. Let's see how it plays out going into next week. All right. So good to see you, Shadow Guy. We got Toast on the list by the way, Shadow Guy. We can take a look at it. Before we jump into that, let's talk a little earnings. We got lots of earnings coming our way. It's going to be a busy week. We've got Palantir announcing after the market closes. Super interesting company. We'll see what they announce. It'll be really interesting to see, and maybe we can take a peek at their financials real quick after I go through the earnings that are coming up. Walt Disney announced. I wanted to take a look because I heard the headline that the earnings were good, but then I looked at the stock price and it was selling off. I'm like, well, what's the story behind that? It looks like some other businesses are going to announce. We're going to have a couple hundred earnings. Okay. So we're going to have plenty to do this week. And then we're also going to look at Hess Midstream, which is one of Daryl's holdings. And tomorrow we're going to have AMD. I know some of you own AMD. That'll be interesting to see what kind of growth they're going to announce and what kind of forecast they have going forward. Are semiconductors going to continue to flourish? Merck, Pepsi, Amgen, Pfizer, Eaton, Chubb. It just keeps going. Wednesday, that's a big, big day. And Google This one's humongous, coming up on Wednesday afternoon. Eli Lilly before the market opens, so that'll make the morning interesting. AbbVie, Novartis, Novo Nordisk, Banco Santander. I know I butchered that. Uber. Let's do this, Uber. Show us some top line growth and everything will be all right. Qualcomm. Now, here's what's interesting about Qualcomm is Apple had a very good earnings, impressive top line growth. And you know who makes the chips that goes in that iPhone? Qualcomm. That's who makes the chips. So if Apple's selling a bunch of new phones, I think Qualcomm's going to announce good earnings. Just putting two and two together. Looking at Thursday, big Amazon is announcing everybody's going to be focused on that AWS business and seeing how fast they're growing and seeing how much money they're spending in that data center. If they can show better fundamentals, better cash flows, profits, and have a good forecast, this stock's going to fly up. Shell is announcing on Thursday before the market opens. Linde, a materials company, but they do gases more than anything. Really interesting stock. It hasn't done all that well for the 1 year, but it's the biggest market cap of the material sector. Bristol Myers, KKR. I mean, it's huge. Barrick Mining, that one's just been an awesome stock. Looking at Friday, Toyota, Philip Morris, Ubiquity, I'm not going to try again. UI, there we go. UI, the UI stock is going to announce. Kenvue, Biogen, it's going to be huge. So it's going to be a busy week. Lots of news coming out. And Palantir is going to be one of the news makers. They're growing their top line revenue by 47%. If they can keep that going, I think it's going to be fine. The stock's done great, 84% rise over the 1 year, 5 years, 316%. That's looking good. It is consolidating to some extent. It's been consolidating for, I guess, about 5 months. And we'll see what they announce. We'll see what we have in store with Palantir. Now, this one here is kind of interesting here. Walt Disney announced their earnings. Stock analysis. Yeah, stock analysis has it in there. They announced revenue growth, which is good. This is a big, big company with an old, mature business. Their theme parks, movie businesses, even their streaming is new, but it's kind of replacing cable, so they're cannibalizing their own cable revenues to try to get into that streaming business. The gross profit looks okay. So let me go to the quarterly here, see if we can dissect it. Yeah, the growth looks good. Cost of revenue did go up. Gross profit went up. So those numbers look good. Free cash flow is negative. Not sure what they're spending money on, but it's a negative number. Gross margins did contract. That might be a little bit of the problem there. I think if their theme parks are driving all the revenue, theme parks are not the most profitable business that I've looked at. Profit margins there, and the free cash flow went negative. So the market doesn't like everything they're seeing coming out of Disney. So looking at the forecast, 14 analysts cover them. They think there's a 20% discount on Disney. We're in the year that we're operating here, September 30th. 7% growth on top line revenue. And their profitability is taking a hit. Their P ratio is 16.87 next year, which is going to start on October 1, 2026. It's coming down to 15, then 13, then 12. So this is not my cup of tea stock. It's I owned Disney like 35 years ago. It's been a while. And it didn't end well, by the way. It was back when, like 30 years ago, Disney was like really, it was like Apple of the time. Remember Michael Eisner? Mm-hmm. And so I had a good run with them, and then the stock started to really collapse, and it took some of my wealth at that time. I didn't have a lot of wealth, so it really left an impression on me. I don't think I've owned the stock since. It's like once bitten, twice shy. So, what do you think of Disney? Any comments on Disney?
I was just looking at the chart for Disney. It's not one that I own or am interested in. This is a 5-year chart, and I have this resistance line set in August of 2022. This line was here from when we previously looked at it, which has been several months. I just turned it to red because it is a resistance line, but one of the things that I see is it has tested it in 2024, tested it in 2025, and just cannot seem to break above that level. So that's somewhat interesting.
Yep, Mickey Mouse. Mickey Mouse has got to work a few more hours and get some more revenue on the top line. So the other stock, this is Hess Midstream. Now, Hess, the name, right? Part of, or I should say, the Hess company that was an oil company was acquired by Chevron, but this is the Midstream limited partnership business that wasn't a part of the Hess oil company. These guys, did they announce or are they going to announce later?
They announced this morning.
Okay, the stock is pretty much flat. Looks like, let's see if we've got the financials in here. Nope, not yet. Not yet. Any thoughts on what they announced? Did they announce good earnings?
They missed on revenue by 12.24 million. They beat on earnings by 6 cents.
Wow, look at that dividend, 8.62.
Yep.
Now, I don't like that contraction this year. 15% loss of stock price. So that's not good.
Depends on when you buy it, though. I'll show you that.
Last month, look at that. Beautiful. 3.5%. Pays that nice dividend. The forecast for this business, 7 analysts are saying, hey, this is a nice situation where you get a discount on the stock. You get that massive dividend. We have, here is the year we just closed on. This year coming up, it's like no growth. Okay. Profits are going to come down a bit. And the P ratio is going to be 12, 11, 13. So this is a good income stock for sure. What are your thoughts on Hess Midstream?
Well, we'll look at the chart. So on September the 10th, they got a downgrade by UBS. So let me put my cursor on September the 10th. So they were trading, they closed that day at 38.64. And they got downgraded because their largest customer, which was Hess, the oil company, their parent at the time, cut back their rig count, or they were afraid they were going to pull back their rig count. On September the 19th, it actually was announced that Chevron who bought Hess, was going to reduce the rig count from 4 to 3. I sold ahead of time quite a few of my shares, and then I started buying them back on this downturn, and have come back to equal weight on my shares. So I've done actually pretty well. This green line here is my cost. Actually, my cost is at this price after dividends and trades, and I don't do options on this one, but my net cost is sitting about right where I have my cursor, $31 or so. So I'm still doing really well on Hess. I went back and did some analysis on prior times when the rig count had been reduced. And I thought that this was probably what we were going to see based on that analysis. So I thought it was a good time to buy. They could actually get bought out by Chevron at some point. Driving this price down makes it a little bit more alluring for Chevron to actually pick this one up, in addition to the oil business part of it, Hess. So anyway, I'm holding this one because it does pay a great dividend, 8.51%. That's a 10th largest holding in my portfolio. If we look at my trade analysis, I'll make this a little bit bigger so it's easier to see. So I've traded this one several times. These tranches that are in this green color are ones that I've sold over time. So I have a current price of 35 is what I'm in for. My adjusted price is $32. It's had a total return of 6.5, but because of my trading, I am sitting at 8.1. And like you said, if you just bought and hold this when you're would have been about 3.9%. So I boosted my return by 5% or so. I've made 31 trades. I have 23 that are open, 8 are closed, 17 have been winning trades, 14 are losing trades. Gives me a win rate of 55 and a gain-loss ratio of 6.01 to 1. So it depends on when you buy it. You have to buy it at the right time, but if you are successful in doing that, they do pretty well. And because of that, because of that rig count reduction, they cut back on some of their capex. So over the next year or so, you can be expecting some dividend price increases. They want to increase their dividend payout. So you're going to see this increase over time. They just upped it in December.
Perfect.
So we'll see more of that coming up.
All right. So it looks like oil prices are coming down today. So I'm sure that's going to put pressure on the oil stocks. The S&P futures are set to open in 7 minutes, a little down. NASDAQ's down. I think Nvidia is under some pressure, and we'll see what happens there. All right, so let's take a look at, there was a request. I think Shadow Guy wanted to look at Toast. He thought it was interesting. Toast, what do they do? Toast Inc. operates a cloud-based digital technology platform for the restaurant industry in the United States, Ireland, India, and internationally. The company offers software products for restaurant operators and point of sale, such as Toast POS, team and vendor management, multi-location management, kitchen display system. Okay. So I have noticed them when I go out to eat, and I've noticed the Toast terminal, you do self-checkout and so forth. So I've noticed their brand. I get what they're doing. Now, this is kind of a hardware / platform play. Let's take a look at their growth and so forth. Over the 1 year, this stock's been under pressure. Over the 5-year, not a good situation. Capital did not deliver the kind of results that I'm looking for from an investment. Although you could have bought this stock, back to what Daryl just said, is it's not necessarily looking at the overall picture. It's not like you perfectly invested 5 years, but if you invested, 4 years and maybe some months, maybe 4.5 years ago, you'd be pretty happy because you bought at $13.12 and you're sitting at $31. So this one has worked for those that bought it at the right time. Look at that. Back in 2023, you could have bought at 14 and more than doubled your money. So this one, buying it at the right time, would have been a really good idea. More recently, it's really been on a nice pullback here. Look forward to seeing what Daryl has to say about the charts. Market cap, $18 billion. It's been growing its top line revenue. Its forward PE is 27. It's a buy with a discount according to analysts. Let's take a peek at these earnings here. So the growth is really good, 25.76. That is very good growth. And when we look at so a lot of shares have been issued out, by the way. That's not good. So that's, keep an eye on that. I usually don't. So shares outstanding. Do you know what the difference is between basic and diluted?
I'm not for absolutely sure. Diluted might be employee compensation shares. I don't know. I'd have to research that, but I think it's related to something about the employee compensation.
Okay, so I would get my head around this because the numbers are really increasing. That shouldn't be the case. It should be stable and hopefully going down. The share count's going down, but those numbers look like they're growing too fast. That's a negative. Free cash flow, $564 million of free cash flow. That looks good. Gross margins are lower than a software play or a platform play because they make a hardware device. They install hardware in restaurants, and then people use that hardware to make payment for the food that they're getting. Profits are positive, but they are a little low. And the free cash flow margin is okay, 9.63%. So this stock is really rewarded those that bought it at the right time. I'll do a quick valuation on it, but before I do that, let me take a look at their forecast, see if they're supposed to keep growing. So we've got 22 analysts covering it. They say it's highly discounted. They're probably keeping an eye on the growth of the company. The growth of the company here looks good. We're in 2026, growing at 20.61%. Next year, growing at 18, and then 13.7. Those are good growth numbers. They're going to become a $10 billion company now. This is a crowded space. Okay, this is a crowded space. It's not like, hey, they're the only company that's doing payments. Nope. There's, at least 10 that are pretty formidable. And there's lots of companies that are in this space. So that's one thing that I put out there. There's going to be plenty of competition. Their forward PE for 2640, it seems a little high. They don't have a lot of profit. Okay. So the path into my investing heart is have really good profits, have really high free cash flow, have really high growth rate, and have a really good balance sheet. And these guys, they don't have high profits. They don't have high free cash flow. They have good revenue growth. That looks good. And we'll take a look at the balance sheet as well, just to make sure we're doing our homework on this stock. So that looks pretty good. I like the top line. I think having the right expectation on this stock is key. Let me kick it over to Daryl. I'll work on a valuation. Looks like the chat is just exploding. Good morning, everybody. Man, we got comments coming out of my ears, and we're gonna be busy on this stream, Daryl.
Okay, can you tell me how their debt is, Toast? I wonder if
Yeah.
they're issuing shares rather than debt because
So let's see here. Whoa. So no debt, $18 million debt. They hold cash of a 1.86 billion.
Yeah, so they may be growing by issuing shares. That's something you have to keep an eye on, but
I gotta
they may be
exercise. I gotta exercise a pun. I apologize, but they have a lot of dough on the balance sheet. Anyway, back to you, sir.
All right. So I'm looking at 5 years. They were an IPO back in 2021. I was trying to find where I could put this auto support resistance line, and I think I found a pretty good location for that. So it's kind of where the price tends to quiesce at certain times. So during 2022, I mean, the whole market sold off. 2023, they were pretty much flat. 2024, they price went up quite a bit. Then they overshot this quiescent state, came down and tested it a couple times. April was the tariff announcements. Nearly every stock price fell during that time. So I'm not putting it at the bottom of that, more with these other touch points. They traveled higher, came down and tested it from the upper side, and now they're trading just slightly below that. So with that kind of in mind, let's go to 1 year. By the way, there's also a big gap up right here. So I tried to put that support line where it was touching as many points as possible, but it aligned almost perfectly with that gap up in 2024, November. So now I'm going to step down to 1 year. So they have been on a little bit of a price decline. I'm going to go ahead and put a trend line here just so we can see that. I'll draw that across there like that. Okay. So the 200-day was rising. It is pretty much leveled out. It's not really declining too much at the moment. I think I do see a little bit of a decline. The 50-day peaked out somewhere around August of last year and then has been steadily declining. The 21-day is also turned down, and you'll notice that they're trading below that quiescent price. To me, this looks like a pretty good entry point. The RSI is at 35, so it's in bearish territory. We've been in a sell signal since the 14th of January on the daily chart, and it's in bearish territory. But I'd be really watching this one if the fundamental analysis that Victor shares with us momentarily shows that this is a buy. Then the technicals wouldn't be too much longer, and I think they could be showing a really good entry point. Right now, I would still be watching it because it is on a confirmed downtrend.
All right. Let me finish off my valuation and we'll get into Toast here. So their earnings per share was 78 cents, PE of 14. They don't have very high margins. That's why their PE shouldn't be like 35 or one of these crazy valuations. You see tech companies with these high PE ratios because they are tech companies and they have these really exciting margins that they can really make money fast. So overall, it's not all that exciting to me. But understand that, hey, a couple years ago, this looked great. Right now, I'm not seeing a great opportunity. About a 6% premium on the stock. Now, analysts, let me go back to what analysts were thinking through. Analysts were really high on this. So what are they seeing that I'm not taking into account? So the business is growing top line this year by 20, 18, 14. So their profits are going to go up. See, this high PE ratio shouldn't be that high. Huh. Yeah, this one here. So, for example, I put Toast right underneath PayPal. PayPal doesn't sell a whole lot of hardware. They're a platform play, and when you check out of an e-commerce site, if you get PayPal as an option. You can use PayPal quite a bit. So their platform really drives a lot of cash and profit, really highly discounted, but the market doesn't really like them. And maybe I can change this to 18 because I do like their growth. I'm still not there with this stock. This just my lane. What's my lane? What things make a very valuable business? Top line growth. Toast has it. So they're selling a lot of their product. Customers like it, but are they making lots of money from each sale? No, they don't make a whole lot of money. It's a very competitive field. You got to sell at 25% gross margins. It doesn't leave a lot of meat on the bone. And, you have a new competitor get into the market, or there's a price war, then things are going to get dicey. So for me, Toast would be a pass. I personally wouldn't invest in it. It'd be just too much risk. Let me add this thing to our watch list here. I'm going to put it down here. Watch. Yeah, it'd be a good watch stock. Let's put it in here. And pop Toast in here. That way, when paid members are looking at their terminals, they can take a look at the research here on Toast. And what is Toast? What sector are they being put into?
Technology,
software?
computer services.
Yeah. So see, there's different degrees of technology companies and their associated value. I just showed the margins, and the margins don't look that hot. I don't think anybody would argue that. And so there's not a lot of discount there. In fact, we're at zero. So yeah, I'm looking for stuff that's discounted and is potentially going to start, moving higher, because over the next year, 2 years, I'd like it to do, 25, 35% rate of appreciation. So that one's not going to make it into my wheelhouse. But thanks for asking about that, Shadow Guy. Let's take a look at the stock market, see what's going on. The market is open now. Let's go to the 1 day and see which stocks are going up, which stocks are going down. So the Nvidia stock is under pressure. I think they had a little bit of a contract negotiation or something going on with OpenAI. Micron keeps going higher. AMD going higher ahead of its earnings. Apple, they had a good week. I was impressed with the Apple earnings. It looks like the software stocks are licking their wounds. The wounds are pretty deep last week. Geez, they really sold off. And this box keeps getting smaller. Incredible. Hardware stocks are doing well. Netflix is higher. Google a little bit higher. Amazon's a little bit higher. Visa and MasterCard are making money. And looks like the big pharma companies are catching a bid. Energy stocks, as expected, with the oil prices being going down so much today. Of course, Chevron, Exxon are giving up some of their gains for 2026. And gold is going up again. So Nvidia is under pressure, and that's what's going on there. If we look at the index overall, we've got the S&P in the green. Look at that. Okay, some buyers came to the market. They came with some capital to put to work. The NASDAQ is flat, so might be a green day today. We'll see. All right, let me catch up on these comments, man. I'm a little over my head here on comments. Great to see everybody, man. We got a lot of people on the stream. Great to see you guys. Everybody's investing in February, I guess. Big week of earnings. So we covered Falls Grave. Wants to look at Pfizer. What is going on with Pfizer? Speaking of big dividends, you bet that one pays a huge dividend. Mike, the dividend investor guy, has a cash secured put on Toast. All right. Good to know. Good to see you, Mike. Good time to add Robinhood. I think the answer is yes. And we'll take a look at Robinhood, and I'll explain what I'm seeing, what I think is the opportunity. Mike wants to look at Path. I like Path as a business, but man, software stocks are getting killed. Geez, getting run over by a truck. All right. So Ricardo, good to see you.
That was about that diluted
Man,
versus
thanks, Ricardo. So
on
diluted,
toast.
and I think the question was around
Toast, yeah.
And it caught my eye that we have basic, no, okay, where's the shares outstanding? Here they are. Basic versus diluted. Okay. So basic is profits that belong to each existing common shares. Diluted is assuming all potentially dilutative securities are converted in common stock. Got it. So there could be like they gave options to employees, or maybe there's some convertible debt that can be converted to common shares. And that's the other bucket. Thanks, Ricardo. Okay, Mike, Opera's up today, huh? What's going on over in Opera land? Put it on the list. Whoa. So, yeah, that's what I was thinking. And additional explanation and on the shares outstanding. DJ, good to see you, DJ. What is a good entry point on Zeta? We will get to that. It's a discounted stock, but boy, I'm going to say that over and over again. If the company writes software, they're discounted. Good morning, Genetic Smite. I am doing stock reviews today. Let me know what you think or which stock you want me to look at. Dwayne, good to see you. Thanks for joining. Ben 10. The SoFi sell-off is shocking after good earnings. All right, good luck. Good luck with SoFi. So, okay, OGN, we can go over that. OGN, and that's in the US, right? Okay. All right, we'll take a look at OGN. Dre, man, everybody's here this morning. Zoom. And Zoom had a interesting trading week because they own a big part of, what do they own? They own one of the AI companies. We're going to look at Zeta, already on the list, and try to see what would be a good trading point. We don't talk about gold. Looks like we have somebody on X. I mean, we do, but I just can't analyze it. I could talk about it, talk about the incredible rise, but it's a store of value, and it's a hedge on when everything else is not working. Gold tends to be good. Good entry point on Uber. You know, Uber's kind of been flying under the radar because there's been so much noise. So let's take a look at that one. All right. So I think I'm caught up on comments. So now we can get to work. We're going to start with Pfizer. What is going on in big pharma land? So Pfizer. Over the 1 year, not a good picture. But if you bought it at the right time, boy, you're sitting on a really nice dividend pair that has gone up. But I think you could say that about just about any stock. If you look at the April lows, just about every stock was in this situation. So this one here, not doing great for the 1 year. Year to date, it's up 6%. Over the 1 month, it's up almost 6%. The market cap, 150 billion. Revenue, 62.79 billion. It has been growing. We'll take a closer look, especially at the forecast there. PE ratio, forward PE is 9, and the dividend rate is really attractive at 6.5%. When we look at historically, these guys, they outside of COVID, because they had a COVID vaccine that really drove revenue growth, but after COVID, it just hasn't been a solid growth plan. But let's take a look at the quarterly here. September was a contracting quarter. That's not good. And that's what I think. That's why I think the stock hasn't performed all that great over the 1 year, is there's no solid revenue growth. So these guys do drive profit, they drive cash flow, but they don't have a lot of growth, nor do they have a story that's going to enable them to grow. Look at this gross profit line. And then the net profit line is very good as well. So these guys are a cash cow like business that is going to keep, generating profits. But what does that forecast look like for Pfizer? Let's take a look. So we got 11 analysts covering it. They think it's fairly priced with a very small discount. And this is why this stock is not catching a lot of attention, a lot of investment, is they're just pretty much going to go sideways on growth. In fact, they're contracting a bit. Their profit is going to be sustainable. EPS growth is not there, and their P ratios really dropped through the floor. So not a lot of excitement around the stock appreciating, in my opinion. But this is a dividend stock. Where's it going to go from here? Man, I don't know, but I'm just not that optimistic. That top line really means a lot to me. I really like Pfizer's profitability, but will investors want to buy up a stock that's just going to go sideways and actually contract on the top line revenue? Let me kick it over to Daryl, and I'll take a look at my valuation and give you guys a bird's eye view of what I think Pfizer is worth.
Okay, Pfizer is one that I own. They do pay that dividend, 6.5%. We have this auto support resistance line, which they've traded above and below on several occasions. We have an uptrend line from the April lows that cuts through here. They're currently trading slightly below that. 200-day is upward sloping, 50-day is upward sloping. The 20-day is also upward sloping. And they are pretty much riding up their 5-day moving average and currently trading above that today. They seem to run up to an RSI of about 70, which is just below being overbought. There were a couple of weeks here that they got above 70, so they were overbought in this particular case. But I do like the fact that we have prices that are going up and an RSI that is also holding 70. So we're not getting a divergence on this one as the prices run up. So I like that. We have been on a buy signal somewhere since about the 15th of January. That would be confirmed with an RSI above 30 and or 50. And I'm also seeing accumulation starting to pick up. So this tells me that institutions are probably starting to move back into this name. I think they recently bought a company to enter into the weight loss drug category. So we'll see how that goes. And I'm also seeing that money flow is currently positive, which helps with this accumulation. So they're looking okay at the moment. I think the relative strength in the PPO are supporting these higher prices, and we're seeing momentum accompany those higher prices.
Yeah, I think that that revenue growth, it really does have a strong influence on the market liking a stock. No, I'm not breaking any news there. Top line growth is a big motivator to investors. And I think that's where, Pfizer hasn't figured out, how are we going to grow? Eli Lilly has figured out how to do it, and their stock is flourishing. So let me finish off. I'm updating my Pfizer valuation. The numbers were a little dated, so let me pop that in here, and then we'll get back to talking about it. Their cash on the balance sheet is almost $15 billion. Their debt has been coming down, which is good. $61,940,000,000. And their shares outstanding, how is that doing? Are they going up or down? Stayed the same. That's good. So if I measure the cash flows I expect discounted at 8%, they do carry a little bit of a debt load there. And that's why I'm going to go with a higher discount rate. And I'm not growing those cash flows because they're not growing their business. It's going to be sideways. But when I discount those cash flows, I get to a 12% discount on the stock. I don't know that it's going to go down from where it's at. I just don't know that it's going to go up. But let me take a look at what's being forecasted on an earnings per share basis for 2026, and that's $3.02. It's a little higher than what we've got in there, 12 PE, and I don't know if I can hang on to that 12 PE, but I'll keep it there anyway. And this is going to contract a little bit, so I'm going to go with 0. So, I think Pfizer in a way is a safe stock. It's a little bit of a value trap because it's been, not going anywhere. It's just been kind of floundering. And I expected that, at some point they'd start growing just a little bit, kind of like the way Disney's been growing at, single digit growth, but it hasn't. So this is a 18% discount, I think, to an investor, especially an investor that is really focused on income. Not a bad idea. Now, if I was talking to one of my sons and they're in their 20s and they were like, hey, I'm thinking of buying Pfizer, I'd probably want to encourage them, no, go find the next exciting stock, the next Palantir that's going to grow 350% over the last 5 years. And let's go try to find that kind of investment for an investor that has a long horizon of investing. So this one here has its place in the market. 18% discount is what I have on Pfizer. Today, it is trading flat. We'll see where it goes from here. But that is Pfizer. Any last thoughts on Pfizer, sir?
Not for me, nope.
All right, let's move on to Robinhood. Man, we're going to kick it up a notch here because Robinhood is an interesting high growth stock. They go up and down pretty fast, mostly up. And look at that. I kind of telegraphed where this thing was going to be going. It's going down, I think. Is Bitcoin under pressure today? It seems like so Bitcoin is up a little bit, but Bitcoin's down to $78,000 a coin. Bitcoin was up at around $120 per coin in the last 12 months. So Bitcoin has not been flourishing. It looks like Robinhood is taking a hit today. And I think the person that asked about Robinhood is there a good entry point, or what do I think about Robinhood? I think very highly of them. Let's talk about their culture first. Then we're going to get into the fundamentals because I think you need to know a business to appreciate them. And I think you hear me talk about Amazon on this light, Google, Meta, and these businesses. And the thing I like about Robinhood is they're not trying to take an existing paradigm and just do it better. They're not saying, hey, we want to take the financial services space and we're just going to work a little faster, work a little harder, and so forth. No, they're in some cases they are abandoning how it was done in the past and blazing a new trail. Zero cost trades, we thank Robinhood for that. They're now getting into prediction markets. That's become really interesting. They're in crypto, of course, and I think they're going to get into stable coins, or they are in stable coins already. And those things are very innovative. So they're not like a brokerage company that we've known for the last 50 years. They're not Charles Schwab. And I think Charles Schwab constantly defends themselves because I think the owners of Charles Schwab as a stock are constantly asking, hey, aren't you afraid that Robinhood's like constantly getting more and more interesting? Well, today it's overly interesting because it's selling off by 9%, but over the last year, it's up 74%. And it's, man, over the last, call it 7 to 8 months, it hasn't really performed all that great because it went up and down. But it's been a really good winner in my portfolio because, again, buying at the right time, right? Buying here is a really good idea. When you bought at $8 a share, you're sitting on really good gains. And in fact, I've bought into Robinhood and I've cashed in my gains and probably already am operating with, the house's money. I've already gotten all my capital back and then some, and I'm still owning quite a bit of Robinhood already. So this has been a good winner. Let's take a look at what we got. Let's look through the windshield and see what's coming up ahead. So we've got a market cap of $81 billion, revenue 4.2 billion, and it's growing. Revenue top line 74% historically. We'll also look at the forecast there. PE ratio of 36.7. Analysts think there's a discount of 32%. Historically, this has been a really nice growing stock. And if the market is flourishing, so is Robinhood. So that looks okay. Cash flow. This is a cash flow positive business, which makes them really interesting, and their margins are terrific. So when we look at the forecast, we've got 22 analysts, weighing in on the forecast for this business and price targets out there. They're supposed to grow this year by 24%. That's good growth. Not as exciting as the last couple of years, but this is going to be driven by, is the market going to be, are we going to be in a bull market or a bear market? Is there going to be a lot of people wanting to put, money into Robinhood? And I think the answer is long-term, yes. I think the investing population in the US and around the world constantly gets bigger and bigger and bigger because people get more informed. They understand that, hey, I don't want to have my money in a savings account that's going to barely deliver a rate of return. I want to understand certain businesses or even ETFs. I'd rather be in the S&P and invest and have a greater rate of return so I can have some freedom at some point, whether it be, hey, I want freedom to buy a house. I want freedom to retire early. I want freedom to send my kid off to whatever college he wants to go to. So that kind of stuff is really going to constantly drive a long-term pattern of more and more people are going to be investors. And people like Robinhood. I think Robinhood is really winning with the younger investor. And that younger investor is going to continue to get older, get wealthier, have more capital in the market. All those things look good for Robinhood. Whereas the traditional brokerages, they've been selling to older investors, and those older investors, they end up going into mutual funds and ETFs. Not a lot of trading going on. So this number here, I think, is a little low, depending on where the market's at. I would say that my forecast is probably higher than this. EPS, they are profitable, $2.60 a share. We've got growth on that bottom line at 24%, and the PE ratio dropping to the 20s over 2 years. So these numbers, I'm thinking these are a little too conservative. I think they could be higher. All right, so that's where we're at there. One thing that I didn't point out, right? What's a great looking company look like? So they have top line growth. Okay. If you have top line growth, that means customers love you. They want your product service and you make a lot of money. And within financial services, these guys make a lot of money. So top line growth, they make a lot of money. And culturally, I really like Robinhood's culture. They kind of are like, there's this technology pioneer that is revolutionizing how we do financial services, and they're delivering real value to the end customer. That's great. It's almost like an Amazon within financial services, and I think that's terrific. So I'm going to take a look at my valuation. I'm going to kick it over to Daryl. Before I do so, I want to thank Adams Skidmore for the super chat. I'm going to get to that. That's going to be the next item. And let me kick it over to Daryl. I'll look at my valuation. We'll come back to the valuation in a few minutes after Daryl is done.
So back in 2023, they were pretty much trading sideways. Then at the beginning of 2024, they started this uptrend, which we've added a trend channel to, connecting as many lows as we could, making a copy of that, dragging it up to the top, and making as connections to as many tops as we could. then made another copy, made it a dotted line, and put it as close to the center as we could. So they've had a great run over the last 2 years. So I'm going to step in and just look at 1 year. And what we see is they're starting to break out of that trend channel. The 50-day has been declining for some time. 21-day is declining. The 200-day is still increasing, but they have traded the last 3 trading sessions below the 200-day moving average, with a gap down today. If we end up closing at these levels, it will be a gap down. We have an RSI that peaked out at this top and has since been declining. We're currently in an oversold condition. The PPO as well kind of signaled a sell condition. It moved into bearish territory. We got a day or two into bullish territory, and it has been drifting lower since. I'm also seeing the accumulation on a bit of a downtrend, and we have money flow in negative territory. One. I'm going to look back, look to the left, and see where we can find some support. So basically, we're back in this time frame for prior support. It's currently trading at levels we were seeing in July of 2025, which was moving close to the upper end of the trend channel. If this downtrend continues, I'm looking at levels of about 64. So I am going to annotate that so you guys can hold my feet to the fire at some point. So I'm going to add a trend line, which would be a support level. And I'm going to draw it right there. And I'm going to draw it across. So that's where I'm going to put my stake in the sand on this one.
All right. Thank you, sir. And, I am surprised that Robinhood has been under this pressure, but the market, for like software stocks, Microsoft, and a couple of others, they've been under a lot of pressure. So I think right now semiconductors have been getting a lot of capital. Of course, the rare materials are really getting a lot of investment, and Robinhood and others, like some financial stocks, have been selling off. The big banks have been holding up well. So this one here, it is surprising, but it's not, because it's a volatile stock. It might be just another more of the market awareness that I would say that we're in a scared market. I think investors are scared at the current time. Any kind of bad news is going to cause a big sell-off. Now, when I look at the Robinhood stock, I see it discounted stock. Now, I own a lot of Robinhood stock. I'm not buying additional shares, but I'm holding my shares. And I started to sell off my shares just to trim back, because it became too big of a part of my portfolio. And Robinhood right now is 4.4% of my portfolio. But at one time, it was about $50,000 more. And I'm like, man, that is a smaller company, riskier stock. I got to throttle back on the stock to some extent. And I throttled back enough. I'm going to keep the shares that I have now. And I'm going to look for their earnings that come out February 10th for more information. Robinhood is a stock that if I didn't own it, I would buy it. I've bought it in my son's portfolio. I manage one of my son's portfolios. He owns it. It's a stock that I think is going to be worth more over time. And this sell-off is not a bad opportunity. It's a good opportunity. It's, the market really shying away from Robinhood, but I think it's got a good discount. It's got a good path forward. It continues to add products to its platform. So I think Robinhood's a pretty good looking opportunity. That's where I stand on Robinhood. And next week when they announce, I will update this. I'll compare it to where I was before and see how close or how far I was from where the stock is tracking. All right. So the next question is coming from a super chat. So Adam Skidmore, do you see A-Lab's lack of price disclosure for the newest acquisition as bearish? Wasn't happy to see no price personally. Okay. So they didn't disclose a price on an acquisition, huh? And I'm trying to find the acquisition that I want to make sure that I'm covering the right one. All right, Gemini, you're in the game. Whenever I can't find information, Gemini tends to help me out. All right, so I'm an Astera Labs stockholder. So I'll read this out loud. The latest acquisition made by Astera Labs is the AI X-Scale Photonics, provider of fiber chip coupling technologies. The deal was first announced in October 2025 and was highlighted as a major milestone as the company entered 2026. This strategic move is designed to accelerate Astera Labs' roadmap to optical connectivity in AI infrastructure 2.0, allowing them to move beyond traditional copper interconnects. Okay. So the glass coupling, so fiber optics. Yep. So this is positive. I mean, they're growing. Astera Labs does have lots of cash. So an acquisition in their primary business is a good idea. This stock has, buying it at the right time. This is where I bought it. So I'm sitting on a good gain. I already got all my capital back. I bought into the stock. It flew up. I got all my capital back that I invested. And now I'm sitting on a holding. It's not too big. I'm kind of concerned that this stock in the semiconductor space is priced really high. But it's been kind of going sideways. I would love to see what Daryl has to say about Astera Labs. So they announced next week, a week from tomorrow, and I'm sure it's after the market closes. Market cap $25.47 billion. And these guys IPO'd in 2024. They sold off and then they rallied high. And then we had the big sell-off, which provided a big opportunity. So if we have a nice sell-off, remember, this is where there's really good opportunity where you saw a stock, you saw a company you wanted to own. Wait for one of these big sell-offs and then you can pick it up because the market's just really afraid and they want to just get their capital into cash for some reason. Well, that's when I buy, is when everybody's scared. All right. So market cap is there. Forward PE is 69. It's a high forward PE. They are growing really fast. And analysts think there is a discount available. The growth historically has been phenomenal, 136% growth. You can't find that. You can't find that at Home Depot. You can't find it at CVS, but you can find it at Astera Labs. 103% growth in the last quarter. And the data center is just cranking. It's going to come to an end. I mean, I can't see these businesses spending in the data center forever. The gobs of money they're spending in the data center are so high that they're going to have to throttle back or they're going to go out of business. So at some point it's going to throttle back, but these guys are sitting on a technology that's really important to the data center, which is communicating. When you have these big workloads, massive workloads, and they have to communicate with one another, or maybe you have a global enterprise, you have a big Meta, Google, Amazon, and they have a global network of these data centers, and they have to have their data flow from one region to another. This is where Astera Labs is coming into the picture and becoming really, really important. They have superb margins, 75% gross margins, profit margins at 27%, while growing at 100%. And they have 31% free cash flow margins. You just cannot find businesses that look like this. They're very rare. And analysts think there's a discount currently. Let's take a look at the forecast that they're putting out there. So we've got a lot of analysts paying attention to this little company. 25 analysts are weighing in on 2026, saying they're going to grow at 44%, 35 and 32. These are really good growth numbers. Okay, so if they hit on this forecast, this stock's going to go higher because these are just really good numbers. When you announce this type of earnings and you expand your profit this way, the market's going to look at it going, man, I want a piece of that action. Now, this contraction is expected. I expect a contraction in semiconductor at some point because, again, semiconductor traditionally is a cyclical industry. You have periods of time when you have a boom, then everybody has what they need, and you have a lull, you have a drop. And we should have a drop, but it's been, with regards to semiconductor, I've never seen it in my life. I've never seen it in my investing career be as prosperous as it's been for semiconductor. And these guys should see a contraction at some point, but their technology is really important for the time. So Astera Labs, I think, it's a good opportunity. It's a good opportunity going forward. I've got a valuation on it. Let me kick it over to Daryl. I'd love to hear his comments on what he thinks is going on with Astera Labs and what he thinks is going to happen.
We have this longer term support resistance line. They're trading right at that today. Back in August through November, they were trading above that and then moved back above it, but now they're coming back down to that line. We have this downtrend line, which we looked at them maybe 6 weeks or so ago. So I've extended that downtrend line out a bit, just where we could see where price support may be. We do have a 21-day that is rolled over and declining. The 50-day is increasing, but the last 2 days, if today's trading continues as is, we will have 2 days below that 50-day moving average. The 200-day is still increasing, but they are getting very close to that price level, which is currently sitting at 145.14. So if they break that 200 level, then this downtrend line will definitely come into play. That's supported by some prices that we saw back here in July. The RSI is at 41 at the moment. The PPO has dropped into bearish territory. I see accumulation distribution is in distribution mode. and currently the money flow is in a neutral position. So it looks like sideways consolidation or drifting lower. If it breaks down below that 200-day, I would start looking at the prices around where this trend line is pointing.
Thanks, Daryl. Just real quick, Anderson, you're awesome, man. Thanks for the super chat. It's great to have you on streams. And let me know if there's a stock you want me to look at. I'm a little behind on comments, guys, but I'm going to keep rolling because we've got a long list of stocks to go over. And again, Anderson, let me know what stock you want me to take a look at. Astera Labs is a little expensive. It's 18% priced at a premium. So, and I'm using a higher discount rate, and I'm going to lower that discount rate eventually. In fact, let me do this. I want to start tracking my history and kind of start, scorecarding where I'm at with a stock. And this is what I said on November 12th, right? And that's my analysis from that time. Let me I think I put it a little too close to the other one. Pop it there. That way I kind of have a historic stamp on it. But let me update this because what I want to do is offer up maybe a few changes, and I'll update it again next week. So I'm actually going to move this discount rate. We have a new Fed chair. The expectations, interest rates are going to go down. I think 8 out of 10 people would say interest rates are going to go down. It's just going to take a little while. Now, this is a smaller company, and I'm also concerned about, we're going to have a slowdown in semiconductor. That's my opinion. I think so far, I thought we were going to have a slowdown by this point. I've been wrong. I think I'm right in the expectation. Just my timing's been off. And I think they're going to grow by 50% years 1 and 2. I'm good with that. And that's the growth of cash flows, by the way. So I'm good with that. So on cash, it's not too far from its current stock price. On earnings per share, how has that changed recently? Let me take a peek at their earnings per share forecast. And has that changed at all? A lot of analysts are paying attention now to this stock because it's really become an exciting one other than the big names. So yeah, this one's close. Growth rate, what's my growth rate now? Yeah, the growth rate is a little light. I always like to use numbers that are a little conservative. So I'm not ready to buy new shares. I already own shares, but man, this is a name that, man, there's some watch stocks, and then there's some really valuable special watch stocks. This is a very valuable special watch stock. And this one, I would say Robinhood. There's certain smaller size companies that could just keep cranking up and creating wealth for investors. I think Astera Labs is one of them because its fundamentals are very hard to find. It's so unique to be 100% growth company with very high profitability and high free cash flows with a terrific balance sheet. So much that they're already acquiring other businesses, probably right in line with where their core business is, and it's going to enable them to keep growing for longer. So that's where I'm at with Astera Labs. This is one of the successes of running a YouTube channel and having people like yourselves, investors that come up to the stream and say, hey, let's take a look at Astera Labs, because that's what happened about, I'm going to say, more than a year ago, probably a year and 2 quarters ago. Hey, what's Astera Labs? And man, I looked at the growth rates that the company was experiencing. I'm like, holy smokes, you don't see that every day. I got to watch that stock. So then it started to really sell off. And I'm like, hey, opportunity is knocking on my door. And I bought some shares in Shazam. And the same thing with Robinhood and a couple of others more recently. And I've bought into some stocks that I thought have gotten into that really good buy zone. Daryl commented on it earlier. It's how you buy a stock. If you buy at the right times, Shazam, you make money. You make money the right way, which is doing your homework, buying into value, and then seeing your wealth expand as the stock price goes up. So that's Astera Labs. I hadn't talked about Astera Labs in a little while. I love talking about it because it's a pretty cool company. All right, let me get back on track here. We covered Astera Labs, and we're going to move on to Path. But before I do that, let me catch up on comments. We got a lot of people on our stream. Thanks so much, everybody. Please be a little patient on the chat and us responding because we are going to move quickly through the chat here. Looks like caught up there. Falls Grave. I recall Daryl stating a few months ago, excuse me, that RH was in a trend channel. So we'll check out RH a little later.
Is he talking Robinhood or RH, the stock?
Well, RH means restoration hardware, right?
Hardware. But we were talking about Robinhood earlier. So, Falls Grace, can you clarify whether you're talking about restoration hardware or hood?
Are we talking premium retail or financial services?
Because if it's related to hood, we already covered that. We would need to cover it again.
I think I covered hood quite extensively. And you know, that's my observation of it all. I think I covered that, you know, I think it's an opportunity right now. I own it. We'll continue to own it. I did cut back because it's a smaller company and I don't want that much capital into a company that's been around for 10 years. You know, I'd like to have a little more longevity. All right. So next one. Let me get rid of the comment there. So it looks like SoFi has gotten a couple comments. I'll put that at the bottom of the list and we can take a look at it. Looks like share dilution may be a part of it. And all right, let's keep moving there. Yeah, App Lovin' Ben 10, man, that got crushed on Friday. I'm in the middle of getting out of it because I own too much in communication services. I'm like, geez, 16% sell off on Friday. Are you kidding me? What is going on? And Adam, I think Rubrik is another stock that you're interested in. I added that to the list. We'll take a look at that. So here's an interesting question. I see post if you invested 10,000. Yeah, so Carvana was an incredible rise to a company that was near bankruptcy, and that's not overstating it. They had a used car inventory that lost a lot of value. They had a liquidity problem, and those that invested deserve every dollar they made because they took a big chance. So the 10,000 going to $1 million. I think if you catch a business that early enough, like a small cap, and you just ride it up, I think Robinhood is on that path. Palantir, you know, those types of businesses could go much, much higher. I think Reddit could be a candidate for that. Yeah. So, but I would volunteer this, that, you know, to find a stock like that is a little bit like playing the lottery. I don't play the lottery. I'd rather know that, hey, last year I outperformed the market soundly. I outperformed it the year before. In 2022, I outperformed the market. It wasn't that hard. The S&P was down like 25%. Now, do I want to like try to outperform the market and be like, you know, 50, 75% return, overall return, and then followed up with like, you know, going down 50%? No, that's not what I want to do. Like I covered super investors in a video that I released yesterday, and Michael Burry did just that. He was up big Q1 of 2025, and he was, from the investors that I follow over the last 12 months, he was down the most. He was down like 42%. What was his 43%? So Michael Burry went from, like, in the first quarter, he was the number one investor, and he went to the last place. Well, I don't want to, you guys can't see that. So I don't want to be going from first to last. I'd rather be like top 5, just constantly just be hitting the top, because you compound over year after year. So I would add that comment to the overall. Hey, we're trying to find those diamonds that are going to be worth a lot more. And A-Lab, so A-Lab, best risk reward in my opinion. Yeah, I like Stair Labs. I'm keeping it. All right, cool. Yeah, A-Lab and a couple other stocks. Can't look at them too. It's like looking into the sun. Not a good idea. But do your homework. Be disciplined at earnings. Read through it. Listen to the earnings call. Understand, is a strategy? Are they heading down the right road strategically? Is that what they told us earnings ago, 2 earnings ago? That kind of thing you still got to do. All right, Anderson. Check my comment, Volley Uber. Okay. So I've got Uber on the list, but Volley. And I think I missed a comment there. Do you see a comment on Uber and Volley from Anderson?
I'll go.
We got a lot of comments coming at us. We've got a lot of people on the stream.
I see a super chat from him.
Yep.
I don't see a specific comment about Valley. I see a super chat, but I didn't see a comment associated.
Yeah, me too.
Directly with
I wanted
one.
to make sure.
Okay. And we may have that comment may not have come through.
All right, but we can cover both Volley and Uber. Uber's coming up. Right now, we're going to head into Path, and it looks like I did catch up toward the bottom of the chat just before your super chat. So just before your super chat. That is weird, because Anderson, it's not showing up on my end. Sorry about that. Don't know what happened.
Nor mine.
But we can cover both those stocks. Thanks for the super chat. All right, let's keep rolling. We're going to get into Path, and then we're going to hit Uber, and we're going to hit Vale. All right, so Path is a really interesting stock. We're in the AI era where we're supposed to be seeing super agents do all kinds of work, right? Online, and I think that's going to happen eventually. I don't know how fast or how slow, but the fact that Path has a business that their platform is aimed to enable companies, people working for those companies, to, in essence, automate their work by creating these agents, agentic agents that are doing tasks, maybe repetitive tasks, or looking at particular data sets and looking for patterns or particular ratios and so forth. That's what they do. So as we went into this AI era, I'm like, man, these guys are going to kill it. They're going to do awesome. And their stock has not done awesome. They IPO'd way back here. They got a lot of interest, but boy, that has not been a fun ride for anybody that maybe bought up here. It hasn't been good over the last year. Software stocks have just been clobbered. Forward P of 17.43. Analysts think it's discounted. Now, one thing I would say is the story of Path to me is like, wow, these guys are the ideal company for this time where you have all these all this interest in building AI agents. The revenue is not showing me evidence that my thought process is accurate. Yes, a lot of interest in AI. Don't think I'm breaking any news there. Now, what is missing is the real growth from companies like Path. Now, Path this is what they do. They were designed to be a platform for this type of development. So this is kind of a big surprise that they're not doing any better than that. 10% growth is not that great for a company that's $1.5 billion in revenue. I just showed you Astera Labs, 100% growth. I showed you Robinhood with incredible growth. I could show you some companies like Palantir with incredible growth. Why isn't this company growing faster if they're right in the eye of the storm of AI? Profit is good. They do have very good profitability. I just have to see that top line grow better. Why is that top line not growing any better? Because I love their margins. I think this has high potential. Now, the forecast, let's take a look to see what analysts are thinking is in the path for, in the future for Path. They have a year that just ended. It ended 2 days ago. And they should have done 13.559, but we're getting into single digit growth. That is not good, ladies and gentlemen. So this one here is lacking the kind of excitement that I'm looking for. And just to show one more example, I'm going to show a different software company that's bigger that should be contracting due to the perception that, hey, AI is going to take market share away from companies like Adobe. Well, Adobe's far bigger than Path, way bigger, like 25 times bigger, and they're growing at the same rate. So this growth is not good enough in my book. They're smaller. What if companies like Salesforce are like, oh, we provide everything that Path provides. You can just buy our platform. We'll give it to you for free. That is going to be a problem. Distribution may be a problem for them because a company doesn't want to buy software or platforms from 10 different vendors. No, they want to buy it from one or two or three. You know, if Microsoft offers it, I'll just go with the Microsoft platform. Or if they're a Salesforce customer, oh, I'll buy it from Salesforce. That way I can do AI agents that relate to sales operations and service operations through Salesforce. So I think the distribution may be the limit to our friends over at Path. So there's other stocks that I'd rather buy in the software space other than Path because the fundamentals of Path are just not convincing me that that is the right software stock for me. The discount's there on the stock, but just strategically, I'd rather own Salesforce. I'd rather own Adobe and others. So Path, that's my analysis on Path. Let me kick it over to Daryl. What do you think of UiPath, Daryl?
So the 50 days getting ready to flatten out. The 21 day has been declining since about mid-January. The last 3 days, they have closed below an upward sloping 200, which looks to be peaking out here. One of the things we had drawn on this one earlier that I was concerned about was we had prices that were higher. So we went from this peak to this peak with a higher price, but we had an RSI that was lower. We had a PPO that was lower. That's called a bearish negative divergence. I point those out all the time. They're one of the things that I watch for in charts is something to be careful about. And in this case, that played out almost exactly. So once we hit this second peak, we had that negative bearish divergence. We are down 34% since that point. So pay attention to these things because they're trying to tell you a story about what investors are doing with their purchases and sales. So we have an RSI that has gotten down to 33. PPO is in negative territory. This accumulation distribution line looks pretty sad. We're definitely in distribution on this stock. Money flow is negative at the moment. We do have a support line here at about $10 per share. We could actually bring that all the way back to March if we wanted to, and it would have found at least a couple points there. I would not be surprised to see this level come into play, which is about 1033 at the moment.
All right. Thanks, Daryl. All right, everybody. So the market has decided to go higher. It is a process of buyers coming into the market saying, hey, I would like to snatch up some of these stocks that were under some pressure last week. It looks like the semiconductor space storage is, memory is really picked up that bid. AMD is rallying into the earnings. And I would say that I think my memory is that AMD rallied into its earnings and then it sold off after earnings. Don't know if that's going to happen. We'll see. Intel is going higher. Broadcom is going higher. Nvidia is under still some pressure. Microsoft's under pressure. Man, Microsoft. And I think Microsoft, let's talk about Microsoft for a few minutes. The big sell-off makes it a little radioactive. And I don't know that a lot of investors are going to go into Microsoft. And now that we have a new month, and I don't know how these ETFs reset, but if you have an ETF like the VU, that is the S&P index, the number of shares in that ETF will have to be sold because it's 12% lower. And I think that's going to put a little bit of selling pressure on Microsoft. And in general, I think the strategy is now in question, and it's going to take a solid 6 months for the market to get confident again. Now, could be an opportunity. If you understand Microsoft better and feel like, hey, it's overplayed, the sell-off, maybe not today, but soon, or maybe in a month or two, might be a good opportunity to buy one of the most valuable, important businesses out there. But that's a big if. Apple, I think they deserve to be rallying higher. And FYI, for the last couple of years, I have not been all that kind to Apple. I've been very critical of their lack of growth, but their current growth was really good. Nicely done, Apple. Google is going higher, trying to become a little more valuable. Amazon, beautiful. That's looking good. Walmart. Wonder how my target stock is looking. GEV going higher, Caterpillar going higher, gold going higher, of course. Gold only goes up high. Only goes up, doesn't go down. Visa up higher, MasterCard up higher. Look at the big banks. Wells Fargo doing well. So that's what's going on out there. Let's move over to Uber. Uber was something that Anderson wanted to talk about. Thinking about selling his position in Uber and Vale. We're going to handle Uber first. It's up 0.82% over the 1 year, up 20.73. Now, this stock is always kind of in the middle of a big story, which is, hey, robotaxi, Tesla, man, they are live giving people, Tesla's live giving rides to people in Austin, I believe, with a driverless car. They've been talking about it for 5 years. So finally, it's live. And every time Tesla says, oh yeah, we're going to conquer the world of robotaxi, the Uber stock sells off. But it's just not, like I was talking about Path earlier as a software company, that the story is quite interesting. But once I look at the facts, it's like, wait, Path is not getting it done. Uber continues to see its stock sell off, but it continues to show awesome fundamentals. For example, revenue growth of 18% when they're a $49 billion revenue company. That's really good growth. That's close to $9 billion of top line revenue being added. And what's awesome about this business is that you're not buying cars or hiring people. You're a platform provider. You get to make a lot of money because you don't have to pay for gasoline, cars, tires, drivers. Drivers are sick today. If they're sick today and they don't want to drive, okay, take a day off, but they're not paying that driver. It's just the way it is. It's a sharing economy. Having said that, with the biggest platform in the United States for ride hailing, ride sharing, they are in a very strong position to partner with Waymo or Nuro or other these driverless cars companies, because they're coming out of the woodwork, by the way. Tesla's not the only one. Waymo's not the only one. The Chinese are putting together really strong platforms, and that's where Uber is partnering with those Chinese producers around the world to have that robotaxi technology use the Uber platform, and then they share in the revenues. And it's a quick way for those companies to get return on investment of the big capital they put into those technologies by partnering with Uber and then getting to the revenue portion, the way to monetize the technology they've been working on. So these guys, analysts think they're discounted by 34%. And the future is bright for Uber. I am not selling any of my Uber shares. I own a lot of Uber, not selling one share. I think it's going to be a $1 trillion market cap company. So that's where I'm at with Uber. I'm not selling shares. I can understand investors selling any stock, frankly, or buying any stock. It's your call. But I've seen this with Uber. I bought Uber here. I bought most of my position here. I've bought here. I've bought here. And they're going to announce 2 days from now. Looking forward to that earnings announcement. I think the future is very bright for Uber. So that is Uber. I think I have a valuation that we're going to take a look at. Then we'll look at the charts. And so Uber, beautiful discount. Look at that. So why are they so valuable? Because they don't buy cars. They don't hire people. They could grow their revenues 20% and not buy one car. That's a huge advantage. Whereas you have other businesses that are having to spend so much capital to support the growth of the business. Don't need that in Uber. We just need, the platform to keep growing. Just about everybody has it on their phone. Their Uber Eats business is doing well. So I'm good with Uber. It's a big investment. And I had this little chart, right? Because people, or I should say investors, and it's a good idea, just check in on the competition. I should have put a date on this. I don't know when I did this. But I did some searches, and I think this is this is per day or per week or per month. But basically, Waymo is doing 0.013%, not even like a 0.1% of the capacity that Uber is doing in the United States. So it's like, is Waymo going to compete with Uber? Maybe, but they got a long ways to go, because the comfort level of people getting in a car with a stranger or a technology, like I have relatives that are like, I'm never getting into a robotaxi. That you got to be crazy to do that. I'm ready to do it. I don't care. It's like, it's a machine. I'm good with it. Let's take a ride. I've never taken a Waymo ride, by the way. It's not offered here. It's not that, universal yet, but we'll see when I'm able to take a ride. Over to you, Daryl.
Okay, and I am a shareholder of Uber as well. We're looking at 5 years worth of data, and I have this auto support resistance line, which has been tested many times over the years. We also have an uptrend line that began at the end of 2022 during the 2022 bear market. So we have that connected to several points along here. It is currently trading below that trend line. So I am going to just go into 1 year at the moment. So the 200-day is still increasing. The 50-day is declining. They're trading below the 50-day. The 21-day had been declining, started to move back higher, and is now declining once more. They are trading right at that long-term auto support resistance, which they were testing at the 18th and through the 19th of December. They tested that as recently as February of this year. So I'm not selling here either. I think this is probably actually a pretty good time to buy. The RSI is at 42. So I like to see it hold at 40 RSI, which it appears to be doing. We had a couple days here where it dropped below 40. The PPO is currently in bearish territory. I think the sentiment of some of the, like Victor was talking about, is playing against this one at the moment. But I think it's probably a pretty good time to pick up shares here. The next support line I see is around 71. I don't see it going much below that level. So they are still in a decline. I probably won't buy shares this week, but I'll continue to watch what it does on the RSI and the PPO over the next few weeks and see when it's time to pick up a few more shares.
Excellent work. Thank you. So, on buying and selling Uber, I think Uber is a terrific business. I think it's a long-term play for me, but it's your call. And I'm glad that, hopefully you're making money on both Uber and Vale, Vale's the next stock that we're going to look at. This is a company out of Brazil, and these guys do iron ore as well as some other, I'm going to call them basic materials. And they distribute to the Americas, Europe, Asia. I'm sure China's buying up a ton of iron ore for their steel production because they are producing a lot of products, including EVs. Market cap 72.8%. They pay a nice dividend, and the revenue has been growing over the last trailing 12 months. The earnings per share is a little bit down. Analysts think it's gotten a little expensive because over the 1 year, it's up 73%. Beautiful. What a good looking chart. Look at that. Nice and smooth upward. It hasn't been the case always. You've had this stock really declining as we had material prices really go down. I expected that material prices were going to bounce back, and I've been trying to cover them, year after year, kind of seeing that, hey, more recently, it's really been a good time to be in materials. This stock here, looking at the forecast, it's hard to forecast materials because for how long are we going to see better material prices? But in their case, they're supposed to grow 5% this year, 2% next year, and their profitability is contracting. I guess the cost is going up. Forward PE has gotten high. So these do look expensive, by the way. This is not very good growth with a fairly expensive PE. I have a valuation on Vale that I completed on December 12th. And right now, compared to that price target of $16.96, it's a 5% discount, which isn't very good, a very good discount. So this one here, man, I would not argue with somebody saying, it's not a bad time to sell Vale. It does look like it's done really well. And I'm glad you're in it because you're doing really well. But those are my comments on it. What do you think about Vale, Daryl?
So last time we looked at this, we had drawn, this was a resistance line before, so it was colored red. because we had found 3 times where they had traded up to that price and were unable to break above it. Look what they've done now. So I've changed it to green because they have broke out above that 3-time resistance point and are moving higher. I'm going to step into 1 year. Let me save this so I don't lose my line color change. Okay, now I'll go into 1 year. Now, unlike some of the other charts that I have shown where you have higher prices but lower RSI, this one is having higher prices with higher RSI. So RSI is supporting these higher prices. It's not like momentum is slowing down as these prices go higher. We also see the same thing on the PPO. We have higher prices. We also have a higher PPO. So this is where the momentum is supporting that upward price pressure. We are getting a little bit of a rollover in the PPO. We could get a crossover here to the downside. Let's look at this on the weekly chart. Let me save this once more. I like to look at daily and weekly data. Weekly data kind of removes some of the day-to-day noise. So we are in overbought territory on the weekly chart, steadily. And although we see on the daily chart, we saw the rollover, we're not seeing that yet on the daily chart. So let me go back to a stock like this. I'll show you the technique that I use. Is I add what are called chandelier exits. So chandelier exit, and that's the average true range over the last 22 days. So I will save that. Okay, come on, save. Wow, took a long time. My internet must be a little slow at the moment.
Yeah, and Daryl, your internet is slowing down, so you can tell because it's kind of you're not coming through clearly.
Okay. All right. I'll have to show that another time.
But in general, I mean, Valley's done great over the last 1 year. It's not a it's a good thought that is, is this a good time? What's my exit strategy at this point? Material stocks have done great. Can they go higher? Absolutely. But depending on what you want to do with that capital, I'm in one material stock. It's done well. Don't think it's done as well as Valley, by the way. And I'm actually looking to buy additionally into materials, but they're just doing so darn good. It's hard to buy when they're doing like I wouldn't buy a Volley because it's the chart shows me that man, it's gone up so much. I'm probably taking a big chance buying it now. All right, so let's move over to the next one. Is that okay, Daryl?
Sure.
All right, so somebody asked about Opera, and the stock's really flying up. Now, Opera develops a browser, but what was announced today is that they're actually in partnership with Tether, and Opera provides a custodial wallet for for your crypto coins. I didn't know that about Opera, and that's really causing the stock to go higher. Opera is a discounted stock. It hasn't done all that great over the 1 year, but it's having a very good day. You see, the 1 year has really, really been rough. Even the 1 month with a 16% rise today is only up 2%. So this one here, it's an opportunity, but man, I tell you, as soon as you say software, it just seems like those stocks just been punished for no darn reason. Because is AI really going to replace browsers? I don't know about that. And independent browsers like this, I think some people are like open to the idea of having a browser other than Chrome or one of the big ones. So this one here is not a bad idea. I have a discounted stock. It looks pretty good. That is Opera. And we're going to move on a little bit quicker because we are late in the game here. We've been streaming close to 2 hours and I still have about 6 stocks to go. So I'm going to go over to Zeta. I think there was a question of, is there a good entry price that you can think of for Zeta? So it's catching a nice bid today, up 3%. It has been holding its value. This is in the ad tech space where they help companies, have a good marketing plan and then put their ads on Facebook, streaming on Netflix and that kind of thing. They compete with AppLovin. And over the year to date, it's been under pressure like AppLovin. This one here is a discounted stock. I'm going to show that to you. It's discounted according to analysts. It hasn't been bid up a whole lot over the 1 year, but you see that over the 5 year, it really has taken off. The company is growing revenues 36% top line. They have good profit margins. And when we look at the forecast, they're going to keep growing for another year, but this is kind of scaring me, spooking me a little bit. Why are they going to slow down so much? So I would want this explained. I'm not a Zeta stockholder, but I would want to make sure I understand this, explain it, and maybe have a more optimistic view of what their revenue is going to grow like next year. The PE ratio is really low. That does look pretty darn attractive. And when I look at Zeta from a stock valuation, it is discounted nicely. So it's not a bad stock, but I could show you 25 to 30 software related stocks that are discounted. Zeta is not a bad idea. It's not a bad idea to hold because maybe today is the beginning of something that's going to be better. It's up 2.85%. Hopefully it sustains that rally and goes higher. So how's your system doing there, Daryl? Are you able to look at Zeta?
Yeah, we can look at them real quick. So we've been watching. We have one here where they come up and tested that one and then started drifting lower. We have an uptrend line that they're trading below the last couple of days. 200-day is still upward sloping. The 50-day looks like it's starting to roll over, and the 21-day has rolled over since about the 15th of January and is declining. The RSI is at 42. I like to see these hold that 40 line. We have January. We're getting a little bit of distribution at the moment.
Hey, Daryl, your internet is really bad at the moment, and maybe one word every 5-10 seconds comes through. You want to try to maybe reset your router and see if that helps or something?
Yes.
Thank you, sir. All right. In the meantime, we're going to move over to OGN. It was requested earlier. This is a company that was spun off from Merck, and it does healthcare products for women, and it has not been doing well. This company was spun off, and it has not done well at all. The dividend is somewhat low, and the company was saddled with quite a bit of debt back in the day when they were spun off. $8.8 billion of debt. It has a debt to EBITDA ratio that's really high because they're not making a lot of money. So this one here is I cannot touch this stock. It's too risky. There isn't anything there. Now, if things were to turn around, I'm sure some investors might make money, but it's just the wrong recipe. If I'm going into stocks that are low for a reason, in this case here, they're not growing, bad balance sheet, it's just not, it's taking up too much of my time. I should be go find the next Robinhood. I should go find the next Google. That's my job. My job is not to pick up a kind of a bottom feeder stock. So if this isn't the right investment for me, my investing theory is find stocks that are growing the top line. Find them that they're really profitable, that have a good balance sheet. This one doesn't fit that mold. It does have a decent margin, by the way, but they just got to turn things around because it's not looking good. And that balance sheet is scaring me away. Now, this one here is a pass for me based on the balance sheet. So I know we've covered this one a couple of times, probably in the last year. It's come up and I do remember it. Let's see if OGN is in my valuation library here. See if I have a valuation. I don't, because that balance sheet just scares me away. It's kind of a deal breaker for me. Is the balance sheet's too bad. I mean, you're near 10. My limit is 3, so I can't get into OGN. Somebody else asked about Zoom Communications. We know what Zoom's all about. You're probably on a couple of Zooms a day, right? So this stock did pick up a bid last week. It was announced that, hey, I think they own part of Anthropic. Yeah, they own part of Anthropic. They were an investor in it. So they own about $4 billion of Anthropic. Their market cap is $27.7 billion. This business steadily grows. They just grow a little bit year after year, quarterly, about, a little bit better. And that, I think, is the big problem is you got to grow faster. And it would have been nice for them to have diversified and had other revenue streams in order to become more interesting to the market. Right now, they're a one-trick pony doing video conferencing. And it looks like they're growing by about the amount that they increase fees to their customers. So this one here is just not exciting. There's a lot of software stocks that are exciting. I could show you stocks that are growing more than 10% per year that are much bigger and have just a better future. They have a more positive future. So Zoom is just doesn't have enough business excitement. Doesn't have a strong grasp on the future. I mean, where's Zoom going to be? They have to compete against Microsoft, which is a huge competitor, right? Because Microsoft provides the video conferencing as well. So does Google. Google Meets is pretty darn good. So you got to compete against some big players. It is a discounted stock, but just based on what the qualitative assessment of what's Zoom's future look like, it's uncertain. I would not own Zoom. I haven't owned Zoom for a little while. I owned it before, and it didn't result in a very favorable return. So I'm going to stay out of Zoom for the time being. It would be a pass for me. So that is Zoom Communications. Somebody asked about a security stock, RB. Is that Rubric? I meant to put in Rubric. And that this stock has been really volatile. Absolutely. Look at that. Wow. So these guys do software, and the software stocks have been under pressure, and lately a lot of the security stocks have been under pressure. They are growing really well. How does their profitability look? Gross margins look great. They aren't making money yet. And the free cash flow looks good. So Rubric, security stocks for a long time were doing great. More recently, they've been under pressure. And looking forward, we just finished the year that ended January 31st, 2026. And it looks like the future is not going to be as prosperous, but still good. And their P ratio is really high. I can find other security stocks that look better. My favorite right now is Okta, and second would be Fortinet. So this one here, compared to other security stocks, it just doesn't make it to the top for me. I'd rather own some of the other stocks and see if I have a valuation on Rubric. Yeah, Rubric, and I didn't have a valuation on profits because I don't think they were profitable during this time, but it's just close to fair price. I can find a better deal, a better bargain for a security stock by looking at other stocks like Fortinet or Okta. We weren't sure if somebody wanted to look at Restoration Hardware or Robinhood. Restoration Hardware is a premium retailer. Boy, things have been tough. For a while, investors really liked this when we were all buying stuff because we were cooped up at home due to COVID. These guys had good revenue growth, but since then, it's just been rough, down 53%, P ratio 21. This is a retailer, and they do discretionary goods. It's not like, let's say, a grocery store that has consumables that people need every week. Their revenue growth has been good. Steady growth near 10%. That looks pretty darn good. So that looks good. What about their profitability? Let's take a look. So free cash flow is positive, but not all that great after a couple of years of being negative. Gross margins of 44.5. That's about the same as Target. I'd rather buy Target because I think it's a sturdier stock that really we all know about. And they also sell food, which people go in, you get the foot traffic because people are there to buy their essentials, and then they buy other stuff at Target as well. And their profit margin is low. So this one here is not going to make it to my portfolio. I'd rather buy Target. Speaking of which, what's going on with Target? I saw that Walmart was going higher. Target is going higher. And this one here I picked up. It was kind of a unique idea, but I picked it up here. So far, so good. I started buying it here, and I've been buying as I go, dollar cost averaging into Target. And so far, so good. I'm up positive, and I get paid a nice dividend. I'm good to go on Target. It is not a high-tech stock. It is not one of these growth stocks, but it has been a positive stock for me. And it's a stock that gives me diversification. So I'm always open to making my portfolio stronger, sturdier. And Target gives me some of that exposure that I'm looking for. SoFi, people mentioned that SoFi was volatile and under pressure. And it is under pressure today. Over the 1 year, it has a positive return, but it's been consolidating. Pretty much what we saw for Robinhood is what we're seeing for SoFi. In fact, let's take a look at Robinhood and SoFi together. I bet you they line up for the last year quite similarly. So if we look at the 1 year, yeah, look at that. The charts kind of follow each other because they are tapping into a similar thread, which is, hey, they're reshaping the way financial services are going to be done. Now, for me, I'd rather own Robinhood, which is why I haven't owned SoFi. But those that have owned SoFi have done well, so congratulations. It is a stock that is, I think, reasonably priced, and if you pick it up at the right time, you can probably do well with it. And the last one we're going to cover is AppLove, and I'm sorry if I didn't have time to cover the stocks that maybe came in. I'll take a glance and see if there's something out there. But AppLove is picking up a bit. I'm glad to see that because on Friday, this thing really dumped. Holy smokes, look at that. It was down a lot, like 16%. I'm currently getting out of AppLove, and I think it's a terrific business, by the way. I think it's really worth having. I just have too much communication services, and I need to get one of the stocks off. I've got AppLove, Reddit, Meta, and Google. And Google and Meta are the biggest parts of that allotment. And AppLove ended up being the one stock that got voted off the island for me, but it's been a terrific grower. Look at this growth, 98%. You don't find that kind of growth all that often. And it's been a nice steady growth trend. Looking at their forecast, it looks like their growth is going to persist going forward. These are good growth numbers, and their profitability is very good as well, bringing this stock down to the mid 20s. So this one here, man, AppLovin is super volatile, like crazy volatility at times. And especially for a big cap, right? 165 billion. We're not dealing with a small cap. We're dealing with a pretty good sized cap company. So it is kind of a rocky ride. And I decided to get out, but I could totally understand people getting in, especially when this thing goes, it goes up fast. So might not be a bad time to take a look at AppLovin. All right. So we had an awesome stream today. We had a lot of people on. Thanks so much to everybody. Appreciate the super chats, everybody. Appreciate all the members that attended. And if I missed your comment, I am sorry. I know that toward the end here, like I didn't get a chance to cover Nike, just didn't have time. Sorry about that. Ben 10 and iTube or ITUB couldn't handle that one, but good to see you, Ben 10. Good to see you, Falls Grave. Adam, thanks again for coming in with your super chat. Anderson, great to see you again, and thanks for your super chat. You know, let's see what the market does. I thought we were maybe going to be seeing a red day today. Kurt, good to see you. And let's see here. Dre, good to see you. Ricardo, Dwayne, Genetic Smite. Man, everybody was here today. DJ, good to see you. Ricardo, Mike, ABC, and our newest member, Henry, good to see you. Thanks for joining. And then Sam. So great to see all of you. Thanks for joining. We had a big stream today, a big audience. And let's see where the market's trading before I disconnect. And let's see here. So it's looking more green than red out there. Looks like the software space continues to operate in the green. Computer hardware is doing great. Cisco's up higher. Amazon's doing well. Amazon is announcing on Thursday. Maybe that's a little bit of the market telling us, hey, Amazon stock, it's going higher. I certainly hope so because I'm a big Amazon stockholder. It looks like we're going to be green today, or at least for the next couple of hours. Hopefully that's the case. Everybody, good luck with your portfolios. Thanks so much for tuning in. Appreciate you very much. And good luck with your portfolios. We'll be back on Wednesday in the morning. We're going to stream in the afternoons as well. I'm going to be streaming probably tomorrow afternoon, evening to members. It'll be a member-only stream. And then on Wednesday, same format, open to everyone on Wednesday. If you want a stock reviewed, you could either become a member or you could buy super chat. Most definitely today we had really nice super chat support. We had a lot of members on, so I appreciate that. It looks like Daryl is back. Great to have you back, Daryl. How you doing?
Thank you. And I apologize for this. I live in a rural area, and sometimes we have problems with the internet like this. It's unfortunate, but it is what it is. I apologize.
No worries. It happens. Great to have you back. I was pretty much saying goodbye. And any departing thoughts on the week?
Nope. Just buckle up. We got a lot of economic reports that are coming out this week that may move the markets. So it's just going to be a bit of up and down, I think.
I agree. Well said. Well, everybody, have a good one. Thanks for tuning in.